Early sellers trapped, entry, then straight to target. Jumping onto the 4-hour time frame on AUD/USD, what we can see here is a BOS to the upside, a break of structure. What this does is it induces buyers into the market. Now, this doesn't necessarily mean AU shorts all the way back down to the lows. That depends on the overall higher time frame narrative. However, we can anticipate a short or a pullback and capitalize on that in itself. So this is where we jump onto the 15-minute time frame, as there's not much else to see on the 4-hour time frame. On the 15-minute time frame, we can see we sold off after sweeping the higher time frame highs. Remember, we are not shorting just yet because this can easily continue higher. What's important to take note of is the area over here. Price clearly respected that low or that order block and continued to the upside, leaving a clear level of liquidity below. Another area price left, or let's say built liquidity at the lows, were over here. Same thing. We respected lows and moved to the upside, leaving liquidity at the lows for later. So now this is giving us a conviction for shorts. Okay. Now looking at more recent PA, we went bullish, respecting the level of liquidity here, taking out highs, inducing buyers. Now this prints a liquidity block for us. We then built liquidity here, and this is exactly what we need to take a short. Now let's open up the 5-minute time frame to get a better look at this PA. On the 5-minute time frame, the buildup is a lot more apparent to us. Once price sweeps the buildup, we can short, as we now have a reason to go to the downside, where price built liquidity earlier. Price then sweeps the buildup. And this is where we enter short, putting our stop loss above the liquidity block, targeting the liquidity to the downside. And there you go. The market sells off all the way down to the liquidity built to the downside.